Module 8B, B1, line 97. Buyer shall make application for financing within blank. If left blank, then 5 days after effective date, and use good faith and diligent effort to obtain approval of a loan meeting the financing and appraisal terms of paragraph 8B1 and 2 above, loan approval, within the loan approval period, and thereafter to close this contract. Loan approval, which requires buyer to sell other real property, shall not be considered loan approval unless Rider V is attached. Buyer's failure to use good faith and diligent effort to obtain loan approval during the loan approval period shall be considered a default under the terms of this contract. For purposes of this provision, diligent effort includes, but is not limited to, timely furnishing all documents and information required by a buyer's mortgage broker and lender, and paying for appraisal and other fees and charges in connection with buyer's application for financing. So the key takeaway here is going to be that you need to get your loan application into your lender 5 days after your effective date. So set your alarms. This is a very important timeline based on the effective date. Your buyer has 5 days to submit that application. And I also want to drive home a term that's defined here. It's that elusive term, loan approval. Yes. Loan approval.
Before.
Loan approval. Okay. It's specifically defined, and I'm going to read directly from here. So Section 8B1 is where we specifically defined whether this was going to be a conventional loan, an FHA, a VA, or other. We also selected whether this was going to be a fixed rate or an adjustable rate, a fixed or adjustable, and we set that max ceiling for what your buyer feels comfortable with as far as an interest rate. Those are the terms of the loan, and then we included in that is the loan amount or percentage that we reference in Section 2. So that's the loan. Okay, so we need to get a loan approval is approval of that. So a lender saying, here's a commitment. I commit to lending you based on those terms specifically. And this is where this contract varies from previous versions of this contract, and you're going to always want to make sure you're using the current version. It must also be that your lender has received their appraisal. So lenders 99.9% of the time are going to require that they get an appraisal by a third-party certified appraiser. So that appraisal doesn't need to be ordered, doesn't need to be almost in. It needs to be received by your lender. The lender really needs to deep dive into your financials, your credit score. They're going to want bank statements. They're going to need you to pay up front for an appraisal. The buyer cannot lag on this. So promptly responding, getting the lender what they're requiring, promptly paying for your appraisal up front and not causing for delay is super important. And that's a good sign of using diligent effort. But going weeks with not responding to your lender, maybe not diligent effort. And it's really important because if in the event we get to the end of this and you don't have loan approval, then your seller may make an argument that, well, you didn't try very hard. So you're going to want to keep maybe a paper trail to CYA a little bit to say, I have been keeping up with my lender. I've provided them all the relevant documents. I just purely did not get approved for this loan. And I want to note, loan approval, loan approval. It's this elusive term. It's not elusive. It's very clearly defined in this contract, but if you go to a lender and say, do I have loan approval? They're going to be like, no, lady, you have a loan commitment. And this commitment says, I will approve your loan in the event X, Y, and Z is met. Okay. So you have a set of requirements. Usually, no, I will say usually because nothing is 100%, but usually an appraisal is going to be on there. You need to get insurance for this property. You may need to sell your home.
Right, which we're going to talk about. So let me jump in real quickly because as the buyer's agent, you need to communicate with your client. You also need to communicate with their lender, okay? Just because you have a pre-approval letter, you may not know what the requirements are for them to actually be able to perform on that pre-approval letter. Ask the question, do you need to sell your home in order to be able to purchase this new home? If they say yes, and again, double confirm. Even if they say no, they may not be understanding. Talk to the lender. Make sure you understand this before you write the offer. Because if they need to sell their home before they can close on this new home, you're going to need a specific rider, a home sale contingency rider that must be presented with the offer when you initially present the offer. So do not forget to look for that rider. We will be going over this rider, but it is something that must be included with the presentation of the initial offer.
Exactly. So the key takeaway for this section is the buyer has 5 days after the effective date. Here's another deadline. Set your calendar reminders, set your alerts. They have 5 days to submit their application to their lender to get financing approval.